please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
That don't panic in this market. This is only a bull market correction, and you've seen many such corrections happen in the past. But Lata, you had a conversation with another big market voice?
Actually, there were 4 of them, but let me just play out one part of that conversation. I had actually 5 fund managers I spoke with. One of them was a portfolio fund manager. There were 2 mutual fund managers, and one of them was a private equity investor. We'll just play out one chat which I had with Sam Polyak, who is the portfolio manager at Fidelity Management and Research. He says this correction is a buying opportunity. He had no 2 doubts about the health of the US markets as well as the Indian markets. How would you describe the 4.5% correction in a single day, or the 8% correction from recent highs? Is this just a letting off affair, or is this the start of a deeper correction?
It's a great question. I strongly believe that markets can't go straight up without any volatility forever. And so what we've had over the last week or so is just kind of getting back to normalized levels. Stocks are still up a lot over the past year. I still see the prospects for equity markets and emerging markets in particular as being quite good for a fair amount of time. This correction is healthy. There's nothing that I see globally or in the US that would make me think that fundamentals have changed that much in 1 week. So I wouldn't really worry about it, and if the correction continues, I'd see it as a pretty good buying opportunity.
Well, gentlemen, if you have any worries about the equity markets in the US, you're free to ask Sam or each other. But I just want to persist a little more, Sam. The questions about a little bit of correction is countered by people who say that valuations have never been so rich, that to get to even normal valuations, even a 25% fall will be par for the course, and only then we will come anywhere close to historical valuations. Is that right?
Well, it depends on how you look at valuations. A lot of people talk about the CAPE ratio, which normalizes margins. I believe the margins are higher and higher structurally. And so because of that, you have to look at multiples that are in the high teens, which are expensive. But at the same time, they're going to be getting a nice benefit. One, because the multinationals in the US have a global book of business. And that book of business is much improved because of a recovery in places like India and places like Brazil, places like Europe. So that's improving. You're getting that extra benefit from taxes that are coming down. So you're actually going to have earnings growth, accelerating earnings growth this year, which I think is part of the reason why the equity markets had done so well going into this correction. I don't believe those are going away. And so as part of that, I think overall the US markets are very healthy. Global markets are healthy.
No, are you saying that historical valuation, 12-month trailing valuations may be unrealistic, but forward valuations in the US are normal?
Correct. Because earnings growth is going to, in my opinion, is going to surprise to the upside.
To that Edelweiss India Conference last evening, I caught up with some of the top fund managers, and the unanimous opinion actually was that you must buy the dip despite the rise in volatility. One point which Navneet Munot made very clearly, and I think that point needs to be taken home. Last year was the lowest volatility we have ever seen. This year, no matter what happens, the volatility has to be higher than that. You can't find a volatility lower than 2017. So this is par for the course, was one of the takeaways, but listen in. What kind of a downside possible in this market? It just soothes nerves, and that's why this question. I mean,
I'll pass that. I really can't take a shot at short-term downside.
Vishal?
I don't think there's much downside, to be honest, because I actually come from the view that I think people and investors, like Sam pointed out, one of the reasons flows haven't come in is because people are worried about where valuations are. So unless you have some black swan event, which, we're right, no one can predict, okay? But in a normal world, if there is some crack in the market, even a bit, there are buyers waiting because the story is good. The fundamentals are good. That's my view.
No, I mean, I would think so. At the first dip, people would put more money. As Sam has been saying, it's a hated bull market, at least in the United States. What would your guess be, Vishal? Do you think, Vikas, do you think we can get away with a minor fall only this year? Because of all the factors that will have underlined.
So again, difficult to predict, again, unless there is a major, some macro, which is, black swan event, as Vishal was saying. I mean, we will be around 580 to 600 kind of nifty, EPS. And I would assume that at, 16 to 18 kind of PE range, which is like roughly about 10,000 of nifty, there will be enough and more buyer given the kind of growth ahead of us.
Better.
So I think probably somewhere there will be a lot of money in case suppose the market falls. I doubt I'll be, that market would really fall below that, but markets are always difficult to predict.
No, I'm only asking you for what can be a reasonable fall. We have to exclude black swan events, of course. So a max of another 5, and you would think 4-figure nifty is unlikely, Vikas? Huh? A 4-figure nifty is not something that would be your base case.
Possible, it can happen, but I would assume that that is where lots of money will come in and start getting invested. And, on a given day, on a given particular week, market can go to any level. It's difficult to predict.
Fair point.
So Lata is likely to get a big bonus check next month. And she's asking, should I invest? You're going to get a large bonus check, it seems. I want to make sure whether to invest now or wait for when the Nifty is in 4 digits. And you've been trying hard to get that confirmation. Am I going to see Nifty in 4 digits, isn't it? But on a more serious note, I completely agree with you that I think investors have forgotten volatility. And this is a beast that we have to live with this year. This is my strong view. I think markets have been extraordinarily calm globally, and any kind of risk at any point in time on the horizon, whether it's towards the missile firing in North Korea or early morning daily tweets by Trump or whatever, that did not make any difference any time. I mean, in terms of the stability in the market, I think we are going to see higher volatility. That's a strong view I have. But from the investor's perspective, if the soothing the nerves, I think for the next couple of years, the micro looks interesting. I think India had an extraordinary macro. That at the margin, probably you may not see incremental improvement there. Probably you see a little bit of deterioration. But from a micro story, I think purely bottom-up looks very interesting next couple of years. But those returns are not going to be like coming in that linear fashion where every year you will have what we saw in mid and small cap last year. There are several pockets where there is a bit of froth, and that needs to get corrected. We have seen a lot of that correction happening in the last couple of weeks, and I think that trend we'll see for some more time. So brace for volatility, but remain prepared to put money on dips.
Okay.